I'd like to welcome Chye-Ching Huang to the National Press Foundation. Thank you so much for being with us. And by way of introduction, Chye-Ching Huang is the Executive Director of the Tax Law Center at NYU Law, as you'll hear, originally from New Zealand, and has been a tax academic, but now also regularly testifies to Congress about tax issues. So thanks again for making time. We're going to let folks, since this is journalists, interrupt you by sticking chats in the question as you go, questions in the chat, sorry, as you go. And with that, let me turn it over to you. Thank you so much.
Thanks so much for having me. It's great to be here. As you've just heard, my sort of background is in a lot of different parts of tax. So I've been a tax lawyer in commercial corporate practice, an academic, a tax policy analyst, and previously spent 10 years with the Centre on Budget and Policy Priorities that focuses on low and moderate income people and also fiscal responsibility. And I think probably the main reason you might have found me to sort of invite me here is that I co-authored a piece with a terrific colleague of mine, Roderick Taylor, about how the federal tax code and tax system can be used to advance racial equity. I've also sort of been on the steering committee of a number of tax coalitions that have a particular focus on the tax code and racial equity, and in particular, the Tax Alliance for Economic Mobility. The Tax Law Center at NYU is new. We have an aim of improving the integrity of the tax code, saving and raising revenues, advancing equity, and by equity, we mean multiple dimensions of equity, including race and gender, geography, and various other dimensions of that important priority. So I think, Professor Brown will have just given you a masterclass in really sort of connecting personal narrative with deep research and thinking through systemic and policy implications of both some of the experiences she's had and what the research says about those. And I think a little bit by contrast, what I'll do is to just try and give you a little bit of a lot of different topics and angles within this really broad potential sort of bucket of issues around racial equity and tax. So to start with sort of explaining in the next slide, what I mean by the tax system and why that can give you so many broad and different entry points. I try to remember to not talk about the tax code or the tax law when thinking about especially racial equity and taxes, because what we mean by the tax system is really a lot of different things. People often think about sort of what's written in the code, the statute, as the law, but the process of what tax law actually is in practice for people is not something that ends with the enactment of legislation. Regulations are really important in tax for determining exactly what the tax law means and what people can and can't do on their tax returns. And there can be a couple of hundred of those either being proposed or finalized in any given year. And those regulations can have really large impacts on even the top line types of things that we think about when we think about the tax system. So the 2017 tax law, I think a lot of you will have heard, was, the estimate was that it added 1.5 trillion to deficits. The estimate later on was increased to 1.9 trillion. But that was the law itself. And we've seen since then that just the regulations implementing the international tax provisions of that law likely added $100 billion over 10 years to the cost of that. So that was decisions made by the administration about how to interpret different parts of the law and what guidance it would give to taxpayers in terms of how to comply. That added quite a lot of cost. And that has distributional impacts as well. Likely a lot of that additional cost will have gone to large multinational companies, potentially increasing the tilt of the legislation. There were other things like opportunity zones, pass-through deductions, that all, through the regulatory process, made really big decisions about who could access certain tax benefits and what they had to do to access those benefits. And because of that, there was a lot of input in those regulatory processes particularly from private actors that were directly impacted by those regulations, and less so from public interest voices or people that were taking a broader scope of what was happening in those regulations. So, as I'll sort of touch on a little bit later, procedural elements of the tax code and who shows up in those procedural elements is also a big part of what the sort of broad idea of a tax system. There are also things like overarching regulations, such as the Biden administration's Executive Order 13985, that asks, at the moment, all federal agencies to pursue equity, meaning consistent and systemic, fair, and just impartial treatment of all individuals. So that's, again, something that doesn't sort of come out of the IRS or Treasury Department, but can and should have an impact on the way that it does business going forward. And still, it doesn't end there, because certain taxpayers may take, may have different views about how the tax law should be interpreted than what the administration does in its regulations or in its handling of particular cases. And there are hundreds, thousands of tax cases decided each year in the tax courts or in the federal courts. Each of those, some of them can be worth hundreds of billions of dollars for a single taxpayer for a single year. And, there are those that also have really broad systemic impacts. One recently decided 2 weeks ago Supreme Court case, for instance, could make it easier for tax shelter promoters and to sort of disseminate those tax shelters, and much harder for the IRS to get information needed to sort of understand those shelters and ensure compliance. Likewise, just as in the regulatory process, who has the ability to challenge the IRS, who can afford representation, who can afford to appeal over multiple years up to the highest court in the land, are all things that are highly disproportionately tilted towards those with the highest resource. And although, again, and this is another theme that we'll return to, although there's not much documentation or statistics of this, also likely highly tilted by race. Then we've got audit, compliance activity, tax administration. This is also a really important part of the system and how people experience what's written in the law. You probably will have heard that IRS funding since 2010 has been cut and cut. And the IRS overall has lost about 20% of its overall budget. The bulk of that, more disproportionately, the cuts have fallen on compliance activity. And that's had really uneven impacts in practice. The audit rates for the largest corporations have been cut almost in half. The audit rates for very high income filers have dropped by more than 40%. Audits for low and moderate income people, particularly people claiming the earned income tax credit for workers, those have also fallen, but they've fallen far less dramatically than audits at the top of the income distribution. And that's because the IRS has been very, very clear. Those audits for low income people are much cheaper and easier to administer. So when they're losing staff, and particularly losing the staff that are able to do the most complex returns, they can't shift people from doing IRS audits to doing those most complex returns of multinationals and high net worth individuals, because it takes so long to train those people. And therefore, they just simply don't have the qualified personnel who are able to do those audits. And so those audits have dropped far, far more than audits at the bottom, meaning that EITC filers are now audited at about the same rate as the top 1% of filers in the income distribution, even though the top 1% of filers contribute maybe 30% of the tax gap of taxes not paid, but EITC filers are responsible for only 6%. And that's the very reason why you've seen disparities emerge by geography and possibly by race, because of that much higher drop in audit rates at the top. And that's why a former IRS person and ProPublica also found estimates based on zip code filing and EITC filing that the top 10 most audited counties are highly concentrated in rural counties in the deep south where the populations are predominantly Black. So it's really a story of who's benefiting from those resource cuts the most. Okay, so other aspects of the tax system. There are multiple levels of this system, starting right at the top from the Constitution, which determines what types of taxes the federal government is actually able to levy. And that's a thing that we'll turn to later. There's federal law, of course, state and local, and as has been getting a lot of news at the moment, international law that actually also sets the framework for things like international taxation of corporations that are doing cross-border activity. We look at things like revenues, distribution, and behavior across how these tax elements of the system affect people. Often, people find it very obvious and often skip past it, but what the tax system funds is a hugely important part of the story about how it can have disproportionate impacts by race. And as my paper sort of laid out, there are many studies that suggest that one of the ways in which the US tax system is unique, and one of the ways that has perhaps been influenced by race over time, is that overall its size is much smaller relative to other countries. And relative to other countries, the federal government spends a lot less, invests a lot less in the types of investments such as early childcare, paid family leave, investments in reducing child poverty, and a number of other areas that are highly linked to improving mobility and opportunity across races over time. So that sort of what the tax system funds piece is, I will also not spend a lot of time on that today, but it is really a very big part of the puzzle, and potentially a causal piece of the puzzle of why there is such a small tax system in the US relative to other countries. There's a lot of discussion about distribution, and there's multiple dimensions of this that intersect with race. So one of the biggest pieces is that the tax system doesn't directly have impacts based, or explicitly have impacts based on race, but it affects consumption, income, and and wealth and other types of economic factors that are themselves shaped by decades and generations of policies and private acts that have been racially discriminatory and create a distribution of income, wealth, and consumption that is itself heavily skewed by race. So you have these impacts up and down the income distribution. You can also see that even within the same income or wealth level, there might be provisions that have different impacts by race. Dorothy Brown would have talked about some of these. So for instance, even if you had two families at the same income level, and they were in theory able to access the same mortgage interest deduction, the Black family on average would be less likely to be able to leverage that mortgage interest deduction into an increase in house price values over time because of the intersection with discriminatory behavior in housing markets and credit markets. So those, it's both important to look up and down the income distribution, but also within income and wealth levels. And then in addition to that, you've got this question of what's happening over time. The ability of people to move up and down that income distribution or up and down that wealth distribution to get more mobility and to get a more equitable distribution of households across the income and wealth distribution will mean the need to sort of improve mobility across those income and wealth levels. And a lot of the pieces of the tax code are explicitly intended to try to improve mobility, but may do so in ways that are very, very disparately distributed by race. So there are a raft of tax benefits that are intended to encourage people to save and to build wealth. And the question there is, does it actually encourage or support that behavior? And if it does, who does it support or encourage that behavior for? Are you actually encouraging saving across the income distribution and across households of different races? Or are you just entrenching the current distribution of wealth and income by giving a windfall to people who would have saved anyway, and who, by virtue of being at the current top of the income and wealth distribution, are currently more likely to be white? So again, there's that additional dimension to the question of what's going on in the markets that these tax provisions sit on top of, what's going on in credit markets, what's going on in the market for providing employer-provided savings vehicles. Even if the tax provision looks neutral, because it's intersecting with these markets and these income distributions that are skewed, it may have a disparate impact. So we can ask these questions about different types of the tax system, either looking at the tax system as a whole or zooming in on particular provisions. And how zoomed in you are to a particular provision in the tax code, or a part of the tax code, or the tax code, or the tax system as a whole can really change your answer in terms of whether or not something has a potentially disparate impact by race. So to take one example, there's the child tax credit. It is a credit that is available to families who have children and incomes up to a certain income level. And because of that income level limitation, and because it has traditionally been linked to work and available to lower income families, it does disproportionately help families of colour who are currently locked out of the top of the income distribution disproportionately locked out of the top of the income distribution due to systemic barriers. So you can look at the distribution of that child tax credit and say that while the majority of families and children who benefit are white, it does disproportionately help families of colour. That's sort of one somewhat zoomed in aspect of that. But if you also look at the families who are left out because of the limitation on the credit that requires people to have earnings in order to get the child tax credit, it is also true that it disproportionately leaves out families of colour who are completely locked out of the labour market, or who are in very low paid and low hour jobs who aren't able to earn enough to get the maximum credit. So both of those things can be true at once, depending on whether you're looking at the provision as a whole or who's left out of it at the bottom. Then you can sort of zoom back even further and say, okay, well, overall, this may be sort of relatively inclusive in the sense that it's disproportionately helping people towards the end, towards the bottom of the income distribution who are getting a toehold in the labour market. But if you zoom back out again and look at all of the tax subsidies that are driven through the tax code, they overwhelmingly and disproportionately go to the top of the income distribution. Then you'll have people say, well, but zoom out again and think about how the revenue that the tax code is raised, and the tax code overall is progressive. So maybe it tilts somewhat against the distribution of incomes and wealth by race. And that is also to some extent true, but then you can zoom out even further and get to the really big picture and ask, well, that may be true, but the US's code and the amount of revenues it raises and investments it makes is much smaller than other countries, and ask the question about why. And from that perspective, there are a number of studies that show that comparing revenue systems across countries, across states, and across time, that suggests that racism and racial prejudice around where revenues are raised from and what investments it funds could actually be a causal driver of that pattern. The final part of the tax system processes and institutions for making and administering tax law. And I've mentioned a few: the process for making comments on regulations, who gets to vote on taxes, who is able to understand what guidance the IRS is giving. All of those things are really important aspects of the tax system, and who is participating in all of these different places, who is more likely to not be a tax filer, who is most likely to be a tax professional, who is likely to be a policymaker, and the distribution of all of those things by race, gender, and other dimensions is a really important part of this story as well. If I can flick 2 slides forward, please. There's not a ton of data on this, and this is another theme that we'll come back to, but here's a couple of imperfect data points on sort of participation in sort of the analysis and the application of the tax law. Tax is an extremely monocultural profession from whatever data we do have, and in fact that is true even relative to other corporate and commercial areas of tax practice. These sorts of data have sample size problems, and they're not collected very often. That's also a problem, because if you're not measuring what matters, you're not seeing whether you can sort of make traction on these sorts of patterns. But typically your tax professional is pretty white and pretty male relative to the rest of the population, and even relative to other practice areas of the law and tax. But this can change depending on what part of the tax system you're looking at. And again, this is why there are so many different angles and different stories, because you can take all of those different dimensions I looked at, cross them with other dimensions, and you'll get a very different story in different areas. So if I can look at the next slide, please. The story is a little bit more, is quite a bit different if you look at the workforce at the Internal Revenue Service and the Chief Counsel's Office, tax administration through the government. In fact, the workforce tends to be overall higher representation of Black professionals than the total civilian labor force, for instance. Now, that's not true of every race and ethnicity that's underrepresented overall in tax. And in a very typical pattern, this does not look quite as good the further you get up in the sort of the ranks at IRS and into the politically appointed positions. But it is important to sort of note that, for instance, if you're looking within Treasury, this is the largest number of Treasury employees. This is a workforce of more than 50,000 people across the country. And that is another angle in terms of thinking through the impact of budget cuts and staffing cuts across the last 10 years in a federal workforce like the IRS. Okay, if I can flick on to the next slide, please. Oh, this is not the slide I was anticipating. Oh, yes. Okay, so just to sort of quickly wrap up before sort of opening for questions, because there's just so much here and I really want to go where you're most interested. In tax, just as in any area where you're thinking about the impact of racial equity, there is, as always, this question that comes up about to what extent we should be looking for prejudiced or racist intent versus really focusing on the impact or focusing on both. And you can sort of see the ways in tax in which those things can be related or not related, just as in any other area of law. So in tax, you can certainly find policies and practices really explicitly motivated by racism. There's a paper that I'll include in the slides that will be available for you afterwards by my colleagues, my former colleagues at the Centre on Budget, that looked at state tax systems. And some of the debates there were really explicit about, in the post-Reconstruction era, there was a concerted attempt to both reduce democratic participation among Black Black voters and Black households, and at the same time, bundling that up with supermajority requirements for tax increases and other constitutional changes that made it harder to enact laws that would raise revenues and invest in education and other public services that would have benefited those Black populations in the post-Reconstruction era. And some of the quotes and stories you can read there are extremely explicit about the motivation of creating restrictions on taxation from that perspective. There are other places where it's more implicit and contested. So there is a lot of context and history around the direct taxation clause of the US Constitution. This is the clause that is at issue when people debate whether or not a wealth tax might be constitutional. The question is whether it's a direct tax and therefore allowed in terms of federal law under that constitutional provision. Many commentators and historians have noted that that clause is the same clause as the 3/5 clause. And they've also noted that that may have been, it's very highly suggestive of the idea that this clause was initially thought by some of the white constitutional framers as a way of being a barrier to taxing slavery out of existence. When people were thinking about wealth taxes around the time that the Constitution was framed, these historians argue that the main type of wealth that they were thinking of was the ownership of chattel slaves. And they were worried about the idea that the federal government could tax slavery out of existence effectively, and created this constitutional barrier in the 3/5 clause in order to do that. And that this is a contested idea. You will see a lot of the contest about how to interpret that clause and the history around it playing out. But that's sitting behind policy questions that are really relevant today about whether or not you could do a wealth tax and what the other alternatives are that might be constitutional or not. So you can find intent, and you can find sort of examples of this historical development. But as you also know, if you just look for racist intent and explicit racism, you can miss a really big part of the picture about how the tax system can affect racial equity regardless of intent. And that's especially the case because we know that some lawmakers have deliberately used taxes as a way of tapping into and fueling racial prejudices in ways that actually allow them to avoid explicitly talking about race. And in my paper, I have a citation to, and you can find it, a really ugly quote from 1981, where a Republican strategist, Lee Atwater, listed cutting taxes as one of the abstract policies that can tap into racist attitudes, serving as a substitute for more explicit racially denigrating words. He used a particularly awful one, because that would be, because a perceived byproduct of tax cuts would be budget cuts that would, quote, result in Blacks getting hurt worse than whites. So that there's a really, very clear quote there that this was thought of as a substitute for more explicit sort of racialized politics. So yes, you do have to sort of look at the impact, and that impact can hurt or improve equity when you're making tax policy, regardless of the stated intent of the policy. You can have really well-motivated provisions that are intended to improve racial equity, but they could backfire. There's a long literature around place-based tax incentives at the state and the federal level, sometimes explicitly motivated by improving communities of color, but that may have, in fact, encouraged displacement or done other things that have really not had the effect that was intended.
Chye-Ching,
yes.
I'm sorry to interrupt. We're coming up on half an hour, and I know we're going to have a lot of questions, including from reporters who are covering these issues right now. Could I stop you, and could we just open this up for questions? I'm sure you have a lot. You can either raise your hands, folks, or you can drop questions in the chat.
Sure.
And let me just start out with one very simple one. From your point of view, what reading the coverage of the current tax issues in the press, what are reporters missing? What are the stories that reporters are not writing that they ought to be writing?
So I think, there is just, I think some of the under-examined parts of the tax system include that regulatory process and litigation. The sort of tax administration piece, how the code really plays out on the ground, is a hugely important part of the tax system. And I think what we are seeing is over the last few years, really appropriately, there's been some, including in the last few days, some sort of blockbuster looks at kind of how the tax code plays out for particular people and for particular companies. But really, a lot of the regulatory implementation of the 2017 tax law, worth hundreds of billions, as I said, worth different, having differential impacts, and particularly in the corporate space, was really not looked at in the way that it could be. The other place that I think is really important is that you will have heard from Professor Brown and other folks that there's a lot of data by race missing in tax, and people are sort of pushing forward on trying to get better estimates of provisions. But in the absence of those hard data, it's really stories about how opportunity zones are playing out on the ground, how different tax breaks are actually impacting communities that have been the thing that lawmakers have been looking at. Opportunity zones is a great example. I don't know if you're sort of familiar with this tax incentive in the 2017 tax law for investing in particular areas that were designated by states. But one of the big problems of the law was that it did not require reporting or transparency or data collection about the impact of these zones. And reporters, local reporters, federal reporters have been terrific at filling the gaps on showing how that's been playing out on the ground. So there are lots of places where folks like myself are sort of complaining about or trying to get more data, where stories are really the thing that are important in the interim to sort of shed light on what's going on, and also to help make the case for why we should be more systemically tracking these things.
Thank you. Okay, a question from Lynn Kim. Can we get Lynn unmuted?
Hi. Oh. Hi. Thanks for doing this. You kind of touched on this, I think, in your answer just now, but you mentioned the child tax credit, and lawmakers, at least a lawmaker in my state, he's been touting this as sort of a way to lift 50% of the kids out of poverty. And sort of going forward, how would you recommend, what should we be on the lookout for the evidence to that might back up or show the failings of a policy like the child tax credit that people think can really make massive change, especially in communities of color?
Yeah, that's really great. And yes, to be clear, like the temporary improvement does try to address that very hole at the bottom that I was trying to say was important, and also includes improvements for Puerto Rico and the territories that have been really missed out of previous debates. So part of the debate right now is whether they should be made permanent or extended. And again, I think sort of this question of implementation is a huge issue when it comes to the CTC and the EITC. Just like with the economic impact payments, there's a possibility that some 20% of people who are eligible for these credits don't claim them, either because they don't know about them or find it difficult to maneuver through the paperwork, have language barriers, are scared about the prospect of getting audited, all of these different types of things where it's incredibly important for the policy to be followed up with ways that make the benefit actually inclusive in practice. So seeing the extent to which both federal and state governments that can help push this out are focused on both having goals and making progress towards those goals in terms of making sure that every person, every child that is actually eligible benefits from these policies is really important. And in terms of, I think there's a lot of, the administration piece does connect up to the kind of the question of who piece, because there is always, as these things come together, there are so many different parts of the tax system that are having input into how the IRS is able to actually sort of provide portals or simplified information or information in various languages. One big question is the funding that they get for actually doing that activity. A completely starved IRS is simply not able to afford to sort of, do a simplified portal or print more documents that can go out to folks. But also they have things like advisory boards and advisory committees that draw on different practitioners and community groups. And there's a question there of like, who is represented on those committees? Who is having a voice in this process about who is, how people are experiencing this on the ground? How are they choosing those committees? Who are they consulting with on the outside in order to understand how to better their outreach? All of these things that are a little bit less sort of tangible are really also important.
Okay, we've got a question in the chat from Danielle. I reported on opportunity zones, and one of the issues I found was that there is no requirement that investors report it. So it was very difficult to draw any conclusions other than looking at individual projects that have been announced publicly. What is your advice for drawing broader conclusions on the impacts of the program?
Yeah, no, thank you for the work that you're doing on that. I think it is potentially sort of a link between having those continued sort of stories on the individual projects and linking to the fact that we just, those are only the ones we know about. We don't know about the rest of them, and the need for additional accountability that is more aggregated than what we're getting at the moment. And I think there's questions for both state lawmakers and federal lawmakers on what those accountability mechanisms should be, because there is power at both the state and the federal level to determine some of the rules around which zones qualify, whether states give additional benefits for opportunity zone investments through their state tax codes, and the federal government in terms of what it's doing.
I have a data question for you, a data privacy question, which was raised indirectly by the leak of the data to ProPublica. So you have this dichotomy now in America where data brokers have all this information on us as a population, including how much money we make, what zip code, incredibly granular stuff that you can get, where you can either buy it or you can go on the dark web and it's been stolen about you. So either way, this stuff is out there that has a lot of impact on income. On the other hand, there's quite strict privacy regulations at the IRS. What is your view about, privacy? Should there be more of it? Should taxpayer privacy be protected to the extent it is now? Is it good or bad?
For ordinary filers, I think it's really important to have those privacy protections. And from an equity perspective as well, one of the things I really am worried about and concerned about, and have had, pretty strong confidence that the IRS is protecting that individual filer information, is for filers that are from communities that have large numbers of immigrants, for instance. There are studies that show that one of the reasons why some filers don't claim tax benefits that they're eligible for include reasons that they may be worried about how that data would be used by federal government and immigration-related enforcement. Now, that can't happen. That is one of the really strong firewalls between the IRS and other government departments. And part of the job for the IRS and for other groups that are trying to encourage people to claim benefits that they're eligible for is to make it clear that they can have that confidence. I think sort of broader access to individual tax information would make that message hard to deliver. And that's why I think it's incredibly important that IRS, protocols remain as robust as they are, and in fact, potentially get strengthened. I do think it's a different story when it comes to potentially corporate tax compliance. There are other countries that have made moves towards public disclosure of certain corporate tax provisions, particularly for publicly traded companies, and improvements on the way that corporations report their tax liability and income for both SEC reporting and other types of reporting, I think could be very beneficial. But that is, to me, a sort of a different segment.
Okay. Keep coming with the questions. I have a question about corporate tax on offshoring and reshoring of jobs and the various proposals. Could you comment to penalize corporations that move jobs overseas and also encourage them to bring them back? First of all, are they effective? And second, how can reporters chase these stories? It's very hard to get them.
Yeah, that is true. So I think there's a sort of an even lower bar, which is to ensure that the current tax code is not actually subsidizing the offshoring of investment or profits. And there are a number of ways in which the current design of the international tax provisions do that. And that, some of the proposals that are being discussed at the moment would reduce some of that incentive. I think sort of just being deeply sourced is always a really good way of going about it. I would sort of offer to folks in terms of contacts. There are a lot of practitioners who are deeply experienced in corporate practice, and particularly ones that are sort of demonstrating kind of a broader perspective on things through having also written academic publications or adjuncting or doing other types of broader policy interest, who are willing to talk on background about sort of what's going on right now, not particular clients, but sort of more broadly about the types of structures and deals that are being done. And that I think is often a really good way in as well.
Another question about privacy related to privacy and leaking is the Panama Papers and what those revealed. So typically the stories get broken in the press when documents are purloined, which creates all sorts of legal problems. We don't know the source of leaker. So my first question is, do you think that whoever leaked to ProPublica or whoever leaked the Panama Papers will be caught? Or do you think that this kind of anonymous disclosure will basically, will they get away with it?
I sort of can't really give a better answer than the former taxpayer advocate, Nina Olson, who was testifying yesterday in front of Senate Finance. And this question came up quite a lot if there are folks that are covering that issue, administration folks and former administration people all sort of took a crack at answering this question. And I think Nina Olson was right, and her response sort of echoed my own sort of thinking on this, which is that it's very hard to imagine how that person doesn't be found, especially if it's someone in the IRS. As she noted, every single IRS person goes through yearly training on this. Every IRS system is tracked and accessible both by other parts of the IRS and by the Tax Inspector General, Treasury Tax Inspector General. So it's very hard to imagine how that could work without someone eventually being found. And I think it's appropriate that they do try to figure out how that works, and because of the potential for sort of chilling on a number of fronts, including access to data that's necessary for really solid analysis by all sorts of dimensions that we're asking for at the moment. So she sort of mentioned that, as has been also reported, there are other possibilities that are not IRS related, including contractors or other external folks that may be harder to track down, but it seems like it would be very difficult to imagine how they don't get to the person if it was from inside.
Okay. Well, so apologies again for interrupting you. I know you had two more slides that you wanted to get back to. If there are no more questions, I'd like to, especially you were talking about the 2017 tax law disparities. So I wanted to go back.
And then I don't have to sort of dwell too long on, but I think it's a good example of why there's always sort of more to the data, and where stories and discussion can sort of add to the data. These estimates from the Institute for Taxation and Economic Policy shows, that the 2017 tax law was very skewed by income and therefore very skewed by race. They proxied for race by income and geography, so they didn't actually have these estimates direct information on race. So even just taking into account income and geography, you see these really disparate patterns. And there are further things that could be talked about that are outside the data because of those data limitations. These estimates didn't include the impact of the regulations. These estimates didn't include the direct impact of certain provisions disallowing about 1 million children who are overwhelmingly dreamers from claiming the child tax credit because they don't have a social security number. These estimates don't include some of the impacts that the law could have on the behavior of firms and employers, including the provision that creates a deduction for pass-through businesses, so-called pass-through businesses, which may over time lead to more fishering and contracting, which could undermine the labor protections of certain employees. So there's always a little bit more because of the state of the data that we have at the moment. There's always sort of more to sort of sit around these numbers that you can go looking for and sort of interpret. There's also nothing in these numbers about the flow-on impact to states. Many states that hooked up to the federal code on this, on the 2017 tax law, will have also automatically had tax cuts come into effect at the state level, and ITEP did separate analysis of that. So again, just to sort of note that the data gaps mean that there's lots of opportunity here for stories to kind of add to the bigger picture. And then my final slide was really just, if I can flip to that, just to note the sort of the range of people that are options for you as resources in this space. None of them are particularly, I think, necessarily surprising, but I'm happy to talk about specific examples of any of these, or to be a resource for connecting you to particular folks within these spaces. I think tax is, like very many areas, but I think particularly so, a really interdisciplinary type of issue. You've got everyone from accountants to sociologists and historians that can give you perspectives that are helpful to sort of thinking through particular tax policies, and making use of all of those different types of perspectives, I think, can be quite helpful, because within particular groups, there may not be a really large number of folks that are focused on racial equity and sort of have deep scholarship in those areas. Which is one of the reasons why it's terrific that Dorothy Brown's work is getting such attention, and I think sort of opening up people to the idea of this is a really fruitful area of focus.
So we have a question from Rachel Riley with the Everett Daily Herald. She says, if I'm seeking information about the tax breaks a company is getting, particularly a large public one, where could I look? How much of that might be public?
Yeah, so this is where you get into a couple of sort of places, and this is not my specialist area of expertise. Folks like Public Citizen and Fact Coalition are really deep on some of these things. Elise Bean at the Levin Center, who did a lot of oversight for Representative Levin, also sort of really knows these data well. But a few big places to look include the 10Ks and the financial reports, and these, as we know, are pretty incomplete in a number of ways, which is part of the push for improving reporting of tax provisions. But sometimes it can be really, really getting into the weeds on that and looking for footnotes on particular issues. So I remember when we were looking at the potential repeal of the Affordable Care Act, there were some folks interested in seeing to what extent that would deliver tax cuts to producers of brand name pharmaceuticals, because that provision would repeal a provision of the Affordable Care Act that increased taxes on brand named drugs as opposed to generics. And the only way that you could get insight into that, and particularly some of the companies that were paying that tax and would benefit from repeal, was to go looking in those 10K financial statements in a footnote when they were moving over as they implemented the Affordable Care Act and had some tentative estimates of the amount of tax that they would pay. And some people were able to sort of go through, compile that, and link that up to the particular opioid producers for whom this would be a particularly large tax cut if that provision were repealed. So that's one source. Another potential source is looking at, and it's more sort of the start rather than the end, is looking at lobbying disclosures and who is actually sort of lobbying on particular tax issues. And that could sort of, those statements are usually pretty broad, but it can give you a sense of what is particularly of interest to a company. So those are a couple of places.
Thank you. Could you mention those few names you said at the beginning of organizations that might be helpful? And I think you mentioned one person, Elise.
The Levin Center, her name is Elise Bean, B-E-A-N. She's particularly helpful because she's done so much work on oversight. There have been, and these oversight committees really did often do really deep dives into the tax positions of particular industries over time. So she might be able to point you in a number of places, but Public Citizen, for example, has just put out a report where they look at the lobbying of particular corporations, linking them up to a report by Institute for Taxation and Economic Policy on who pays zero taxes and looking at their lobbying dollars. And the other place is the FACT Coalition. I forget the exact, the Financial Accountability and Corporate Transparency Coalition, who also does a lot of work both with financial disclosures and some of the lobbying disclosure work.
Okay, we have to wrap up. Our next guest, McNelly Torres, is here, but I see we have one more question, if you don't mind, Professor Huang, can you stay? From Nick Grube in Honolulu, of Hawaii, sorry, in DC.
Yeah,
go ahead,
Nick Grube with Civil Beat. Hi, I kind of have a similar question, and it's sort of hopefully a quick one about, is there like a clearinghouse where we can go to and look at a list of all the various tax provisions that have been passed over the years, where we can sort of look at them and as reporters sort of target those and say, this one might be important to my community, I should dig into it, whether it's opportunity zones, which were passed in the Trump tax and Jobs Act, or some other sort of provision where there was an obscure line buried in some piece of legislation that benefited one particular company that happened to be located in this one area, et cetera, et cetera. So, I mean, do you have any suggestions for where we might be able to look for those leads?
Probably not at that level of granularity. And the problem is there are so many of these provisions that it's hard to get that level of granularity. But I can pass on to Sunny, and she can send to you all if you would like. The Congressional Research Service does a gigantic compendium of tax expenditures where it runs through every single provision that is a tax break that is for a specific type of activity or industry, and it describes that tax break, and it also summarizes some of the literature on it. Again, because it's so many, this thing runs to like over 1,000 pages, and even then it's only a few lines sometimes on each tax expenditure, but that's a really good starting point just to get a flavor of some of these things.
That would be great, thank you.
Okay, well, thank you so much. I really appreciate you being with us. Thanks for the good questions. And this transcript will be posted online and the video later for those who will obviously have to go back and check on the details of some of what you've told us.